Good day, everyone. Good day, everybody. Hope you guys are doing great. Can we just confirm in the comment section if you guys can hear me? Can you confirm if you can see me, if you can hear me? Please confirm in the comment section. Super excited to be here. Super excited to be here with you guys. It has been a while. Please let me know if you can see me, if you can hear me.
Welcome. This is it. Put it by MT5, right?
Come guys, can you guys confirm? I don't see anyone confirming.
Welcome. This is it. Put it by MT5, right?
Come guys, can you guys confirm? Loud and clear. Okay, great.
I don't see anyone confirm.
People are confirming. Okay, great. Guys, let's get on to the business of the day. Hope you guys are doing great. It has been a while, man. It has been a while. I missed you guys. I hope you guys missed me too. I really missed you guys. It has been a long time since we had a session. Today we are having an introduction to beginners, introduction to forex trading for beginners. All right, let me just record today's session. Okay, great guys, welcome to introduction to forex trading with myself, Isaac Easy. All right, yeah man, let's get on to the business of the day. Before I begin today's session, I just love to give out a disclaimer that any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. The market observations and insights provided are based on current data and trends and are for informational purposes only. They do not constitute financial advice, recommendation, or endorsement of any kind. Trading and investing involve inherent risk. You should consult with a licensed financial advisor to evaluate the suitability of any strategy, trading, or investment decision based on your individual financial situation. Now that we got that out of the way, let us get on to the business of the day. All right. Okay, we do have a bonus for participants. Those of you that are joining us today, we have a special bonus for you guys. If you fund your trading account with ATY Markets with $250 within 24 hours, you will get a risk-free trade voucher. All right, a risk-free trade voucher. T's and C's apply in case you want to abuse it. T's and C's apply. All right, so you place one live trade with zero risk. If it loses, we will credit back to your account. It is limited to one position only, and you will also get the first 5 trades review call. Our team will analyze your first few trades and give you custom feedback to help you to grow faster. And 3, you will get the ATY Markets welcome pack shipped to you for the first 10 people that fund their trading accounts with $250. And all you have to do is send a proof of funded account with the promo code IsaacEasy24. Promo code IsaacEasy24. Right, for those of you who don't know me, my name is Isaac Easy. I am the founder of ATY Markets. I am a graduate in business management and entrepreneurship with the IIE Varsity College. I also graduate in business principles and practices, also certified sales with Meseta. I am also an accredited life coach with the School of Life Training Academy. I'm a professional Forex trader with a decade of experience, well, over a decade of experience. I am the founder of Flexi Forex Trading College, and we've trained over 10,000 students, and we've held over 300 Forex seminars throughout the Southern African region. And my passion is to teach traders like yourself who are struggling or are new to trading, would love to know more about the financial markets. I am passionate about equipping you with the right knowledge to ensure that you become a profitable, successful trader. All right. And I pray that you guys can also just introduce yourselves in the comment section. Let me know where you are from and how long you have been trading for. Let me know where you are from and how long you have been trading for. Today, as I said, we are doing a beginner session. It is our first session on YouTube. What we'll be covering is what Forex is, what is traded in the Forex market, who a Forex broker is. We're going to discuss trading platforms, currency pairs, bid and ask prices, spreads, lot sizes, pips and points, and how to create a live demo account with ATY markets. All right, hope you guys are good. Please introduce yourselves in the comment section. Let me know where you guys are tuning in from. Let me know which country, which city, and whether you're a beginner or you've been trading. And if you have been trading, how long have you been trading for? Right. What is Forex trading? The foreign exchange market, which is usually known as Forex or FX, is the largest financial market in the world with over $7.5 trillion daily liquidity. The amount of money that is traded in the Forex markets daily is over 7.5 trillion US dollars. Now you can imagine how much money that is daily. It is the largest financial market in the world. All you and I have to do is to just get a piece of that $7.5 trillion each and every day. The beautiful thing about trading is that it is open 24 hours, 5 days a week. So from Monday in the morning or at midnight, which is Sunday midnight, until Friday midnight, the market is open. So whether you are in school, whether you are you are working, or you are unemployed, or you're a business owner, there is time that you can allocate to the market and make sure that you become profitable. All right. And the best thing about trading is, unlike other businesses, you have the potential to earn money each and every single day at any given moment or any given time throughout the day. The Forex market is a global, decentralized market where the world's currencies change hands. Exchange rates change in seconds, so the market is constantly fluctuating. Now, if you've traveled abroad, like myself, which I actually just came back from Zanzibar, on Saturday, I was away in Zanzibar for the whole of last week. When I get to the airport, I go to a place called the Bureau Exchange, where I change so in Zanzibar they use Tanzanian shillings, or they use the United States dollar. So when I get to the airport, I change my rands for US dollars or Tanzanian shillings. So that is what foreign exchange is. However, on the Forex market, because these prices are fluctuating each and every second, what we do is then we speculate on the price of those different currencies, and then we make an informed decision on whether we'll be buying a set currency pair or we'll be selling it. And whenever price moves, if it moves in our position, we'll be in a profitable position. If it moves against us, then we'll be losing in a losing position. Does that make sense? All right. Are you guys with me? I don't see comments. I would love to know who. I've asked that you guys introduce yourselves. I've asked that you guys talk to me in the comment section, so I know that we are on the same page and I am not losing you guys at any given point. Are you guys still with me here? All right, so what is traded in the Forex market? One is currencies. All right, we trade currencies. This will include the euro, or world currencies can be traded in the forex market, but there are major and there are minor currencies, and we'll get to that when I teach you guys more about forex currencies. So this will include the rand, the euro, the pounds, the dollar, the Japanese yen, the Swiss franc, and so forth. We also trade commodities. This will include like gold. You can trade gold without actually buying the physical gold. You can trade the price of gold, or you can trade the price of silver, oil, and other commodities. We also trade cryptocurrencies. In the last 10 years, we've been seeing a rise of cryptocurrencies. A lot of people are now getting more knowledgeable when it comes to cryptocurrencies. This will include Bitcoin, Ethereum, Ripple. There are so many cryptocurrencies that are out there that you can also trade within the forex markets. All right, are you guys with me? Can we move on to the next session? You guys are awfully quiet. I just want to say, whenever I do webinars like this, I love people to engage so I can know. You guys cannot hear me. Someone says the video is inaudible, so I can know. Well, I just checked on my side. I can hear myself. Can you guys confirm if you can hear me? Just make sure that your video is not muted or your volume is high. Please just make sure of that. As I was saying, guys, I really appreciate if you guys can engage with me so I know who I'm talking to. Let me know. Let's talk in the comment section. All right, don't just keep quiet, because I don't know whether you understand or you don't. Then I'll just pass on a very important information and you don't understand, and as a result, you'll end up being a losing trader, and that's not what I want. I don't like to teach losing traders. All right, I don't like to produce losing traders. I like to produce winning and profitable traders. All right, are we guys together? You with me? Marcus from PE, you're welcome, Mr. Marcus. Right, so we now know what is forex. So what is a forex broker? Who is a forex broker? Forex broker is the link between a trader and the network of banks that have access to forex liquidity. Now, back in the day, what used to happen is only rich people could trade the financial markets. You needed a large sum of money in order for you to be able to access the market. And what then happened is, a few years ago, not a few years, but many years ago, they decided that we need to give access to the public. We need to give the public access to the financial markets. But because of the lack of capital, let us create a middleman that will give access to the public, which is you and I, right, to be able to trade the financial markets without the need of large capitals. All right, so that's when forex brokers were introduced into the market. The forex broker gives you access to foreign exchange trading and provides support functions for you. So that means you, as a retail trader, you get to access the financial markets through a forex brokerage. All right, it is just the middleman between you and the market. Carol-Ann from Kimberley, you are welcome. All right, so in simple terms, a forex brokerage is the middleman between you as a forex retail trader as well as the forex market. All right, the recommended broker that we recommend, you guys know, we recommend ATY Markets, the best in the world. Why do we recommend ATY Markets? We have low spreads, competitive spreads, we have high trade execution speeds, no deposit or withdrawal fees. You know, we do local transfers, promos, and bonuses. As you guys can see, that we've given you a promo and a bonus when you started with us. So who are the financial market participants? Who participates in the financial market? You often hear people saying that forex trading is a scam, blah blah blah, and those people are just speaking from a place of not being well informed. Because if you dig deeper and you do research, you'll realize that even the banks that you are using, like your FNB, your ABSA, we have Amor, We have Amor from Namibia. You're welcome. Fuki Wago Josie Tepo Monamadi Forex. Oh, great to have you. Your markets start to trade with you previous but struggling to get back. Let me know what the issue is. Marcus, text me on Telegram or WhatsApp. Let's see how we can help you. All right, so you often hear people saying the forex market is a scam, but because of the lack of knowledge. Your banks like your FNB, ABSA, on all of these banks that you are using, when you dig deeper, you'll start realizing that they also participate in the forex market. It's like if you're investing your money, with Investec or any other investment firm, how do you think they grow your money? Where is it coming from? It's because they're participating in the financial markets. All right, so we have governments participating in the financial markets, central banks, we have your banks, retail banks, we have corporate companies like investment, hedge fund, insurance companies, or any other financial services providers. We have institutional traders, we have brokers, we have market makers, we have retail traders, which is you and I, the individuals who are sitting at home with a laptop or a cell phone and are participating in the forex market. All right, so the next time someone tells you that forex trading is a scam, ask them to log on to their FNB app and go and search forex and see what happens. And also ask them, when they invest their money with Investec or any other bank or any other financial institution, just ask them, how do they think they getting the return on their money? Where does that money come from? All right, so that also should give you a sense of pride that you are participating in the largest financial market in the world. All right, so we won't do that right now because our website is currently under maintenance. I see someone is asking, is the website under maintenance? Yes, it is. So we won't be able to do registration and demo account opening, but I will send you guys a video in the group. Actually, there is a video in the group on how you can register a trading account. All right, and this is MT5, MT4. This is a trading platform. All right, the MT5 trading terminal is a trader's workplace. This is your office as a trader. The platform allows you to work in the financial markets, forex, CFD, futures. With the help of the terminal, traders can analyze the dynamics of financial instruments, make trades, create and use automated trading programs. All right, so we have MT4 and MT5. We call them MetaTrader. They are developed by a company called MetaCodes, which is a Russian company, but their headquarters is in Cyprus. All right, so this is your workplace. This is your workstation, where we use MetaTrader to analyze the market, analyze different assets in order for us to make an informed decision when it comes to trading. All right. We won't do this right now because, as I said, our website is under maintenance. So I will show you. The video is there already in the Telegram group, so make sure you join the beginners Telegram group, and then you can pay attention to that video where I show you guys how to download MetaTrader and demo account activation. All right. Okay, I feel like some of my I feel like some of my slides are missing here, but okay, we'll check. So why traders trade the major pairs? So as I said earlier, we have major pairs and we have minor pairs. All right, the major currency pairs on the forex market are the EuroUSD, USD JPY. So the EuroUSD is the euro against the United States dollar. The USD JPY is the United States dollar against the Japanese yen. The GBP USD, that is the Great British Pound, against the USD or the United States dollar. And the USD CHF is the United States dollar against the Swiss franc. All right, the reason why many traders trade this major pairs is because they have large volumes, and as a result they have slow spreads, they have smaller spreads, so they are cheaper to trade. All right, they are cheaper to trade. All right, and they are the most traded you know, currency pairs in the world. EuroUSD is the most heavily traded currency pair in the world, with the euro against the United States dollar as the most traded currency pair in the world. All right, the list of the most traded currency pairs can be extended by the commodity currency pairs as the USD CAD, the AUD USD, and the NZD USD. All right, but as I said, most traders, and especially you as a beginner, you want to start trading with the major currency pairs, which is EuroUSD, USD JPY, GBP USD, and USD CHF. You can extend it to like your USD CAD, AUD USD, and NZD USD. All right. The reason why these ones are traded, because they are cheaper to trade, their spreads are smaller. All right. What are currency pairs? All right. Let's get to it. Yeah, I see there was a bit of a mix-up. This should have came before that one, but it's okay. I don't know what happened there. A currency pair is the quotation of two different currencies with the value of one currency being quoted against the other. Right. So now we understand that in trading, we don't trade physical currencies, but we trade virtual currencies. So if we are trading, there needs to be one against the other. You can't trade one currency, because what are you trading it by? The virtue of the word trade, it means there are two parties involved, right? So there is, you trading one for another, right? So which means when we are trading currency pairs, they will be traded in pairs and not just individually. They'll be traded one against the other. So that means a quotation of one or the value of one currency against another one, and then you just trade the performance of those currencies. So when it comes to currency pairs, we have the base currency. We also have the quote currency. All right, so what is the base currency? The base currency is the first currency in a currency pair. It is also known as the transaction currency or the most stronger one. All right, the base currency is the strongest currency, or it is also known as the transaction currency. All right, so, and we also have the quote currency, which is the second currency in a currency pair. It is also called the counter currency. Now think of it this way, like for instance, I spoke about the EuroUSD. It's the euro against the dollar. The euro is always stronger than the dollar, but when they are together, they are called the EuroUSD currency pair. What does that mean? It will take this much of the quote currency to buy one of the base currency. All right, let's look at the United States dollar against the South African rand. I believe it's at around 18 rand or so right now. Let's look at it this way. So it's 18 rand of the quote currency to buy $1, the base currency. So 18 of the quote currency buys one of the base currency. The base currency is the strong one. It is quoted against the quote currency. Does that make sense, guys? Speak to me in the comment section. Does that make sense? So it will take this much of the quote currency to buy one of the base currency. The base is always the strong one. The quote is always the weaker one. All right. And we also have what we call the bid and the ask price. All right, the bid price attached to a currency pair tells you the amount of the quote currency you will need to buy one base currency. The base currency is always greater than the quote currency. Do you guys understand that? Currency pairs. Can we move on to the next one? All right, this is an example of currency pairs visual form. So you can see we have EuroUSD, the euro being the base currency and the USD being the quote currency. Here we have AUD JPY, that's the Australian dollar, and the Japanese yen. The AUD, the Australian dollar, being the base currency, and the JPY, the Japanese yen, being the quote currency. In this instance, it takes 83.55 of the Japanese yen to buy one Australian dollar. Do you guys see that? 83.55 Japanese yen buys one of the Australian dollar, and that's what a currency pair looks like. And these prices will be what you see on your MetaTrader 5 or your MetaTrader 4 on the right hand side of the charts. All right. And these are examples of your currency pairs and abbreviations that you may need to know. Let me start with the abbreviations. The EUR is the euro, the USD is the United States dollar, the NZD is the New Zealand dollar. Take a screenshot of this. AUD is the Australian dollar, GBP is the Great British Pound, CAD or CAD, whenever you hear someone says CAD in trading, they're referring to the Canadian dollar. The CHF is the Swiss franc, the JPY is the Japanese yen, and the ZAR, ZAR is the South African rand. All right, and the currency pairs that we have. The currency pairs that we have, not all of them, but I'll just give you an example here. We spoke about the EuroUSD, the USD JPY, GBP USD, GBP JPY, AUD USD. So you will see a lot of these instruments that you can trade. You know, USDs are, it's one of the most volatile one as well. It pays, but then it also chows. So be careful when you're trading that one. Again, I won't do the practice today. There is a video for that in the Telegram group of how you can add charts of currency pairs on your trading terminal. All right. Let's talk about the bid and ask price. The bid represents the price at which the Forex broker is willing to buy from you the base currency in exchange for the code currency. The bid price is how much the broker is willing to buy the base currency in exchange for the code currency. All right. The bid price is the trader's selling price. The bid price is the trader's selling price. So that will be the actual value of the currency, of the code currency, plus the commission of the broker, plus the commission. And that's what we call the spread. All right. The ask represents the price at which the broker is willing to sell to you as a trader the base currency in exchange for the code currency. And the ask price is the trader's buying price. So when you're pressing buy, the price that you are buying there with is the actual value of the code currency plus the commission that the broker charges you in order for you to execute that trade. And that commission, we call it the spread. All right, we call it the spread, and we'll get to it. So whenever you are trading, you will see what we call, there will be usually be two lines. There will be the blue line, which is the actual price of that particular instrument, and there will be a red one, which is either the bid price or the ask price, whether depending on whether you are selling or you are buying. All right, so when you are selling, you look at the bid price, and when you are buying, you look at the ask price. Does that make sense, guys? Are you guys still with me? All right, and this is a visual representation of what I'm talking about. We're looking at the EuroUSD. This is the ask. The ask is 1.36301, and then the bid is 1.36298. So that means whenever price is here and you are buying, you will be buying at this price. But if you are selling, you won't be selling at that price. You'll be selling at that particular price over there. All right, you guys see that? And as you can see here, the base is quoted as 1.36298. That's that one if you're selling, and if you are buying, it's quoted at 1.36301. You'll be buying at that particular price over there. There is just a visual representation of what you will see, especially on your desktop platform. All right, let's talk about the spread. I did touch on it briefly, but the spread is the difference between the bid price and the ask price of an instrument. As I said, it's literally just the difference between how much you are buying and the actual value, or how much you are selling and the actual value. So for instance here, let's look at the dollar rate pertaining to the South African rand. If you're buying the dollar is at 18 rand 76. If you're selling it, it's at 18 rand 78. So that means the spread is about 2 cents, but it's calculated in points. All right, does that make sense, guys? It's calculated in points. So the spread is literally just the difference between the bid price and the ask price. It means it's the difference between your selling price and your buying price of that instrument. This is determined by the broker that you are using, which is why you should be trading with ATY markets, because our spreads are so low, you're actually buying or selling the instrument at almost its value price. And very soon we will be having zero spread accounts. Very soon we'll be having zero spread accounts. So that means if it's 18 rand, you're buying it at 18 rand and you're selling it at 18 rand. All right, let's talk lot sizes. So far, are we good? Do you guys have any questions? So far, are you good, or do you have any questions? Lot size is the amount or quantity of a trade that you buy or sell. It's sometimes called your position size or your trade size. So lot size in actual sense is how much or the amount of risk that you are taking on a particular trade. All right. There are many factors that determine this, the lot size. Many factors. We won't get into it now because I don't want to confuse you guys. But there are also 3 different types of lot sizes. 3 different types. So we have a standard lot size, a mini lot size, as well as a micro lot. All right. So these ones are represented in different units. So the standard lot size is about 100,000 units, which is represented by a 1.100. That's what we call a standard lot on your trading platform. So when you are trading and then you determining the risk that you're going to use, and you put 1.00, that means you will be trading a standard lot. Not recommended for beginners, okay? The value per pip is fully dependent on the leverage and also what the broker charges, but on average it will be about $10 per pip. All right, the mini lot is 10,000 units. It's represented at 0.10, and value per pip is $1, and a micro lot is 1,000 units, which is the minimum one, and it is represented as 0.01, and it is the value per pip is about 10 cents in dollars. All right, now there are also we have nano lots, we have other ones, but these are just the most common ones. But as you get deeper, you'll start to learn that there are more, but these ones where they'll be represented by 0.001. 0.0001, okay, until you get to like 1 cent or a fraction of a cent or something like that. All right, so lot sizes is basically in the perspective of a retail trader is basically where we when you're choosing your position size or the risk or the amount of a trade that you will be buying or selling. All right, or the risk of a trade based off this is how much you have in your account. I'll be taking this much to show you the margin that it is required for that particular lot size, and it will also show you the value per pip of what you will be making, because obviously the higher your lot size, the more money you make, and the lower your lot size, the more money the less money you make. All right, but also the lower the risk. So the higher the lot size, the higher the risk. The lower the lot size, the lower the risk. Are you guys with me? Are we still good? All right, pips and points. You guys are awfully quiet, man. Talk to me, yeah? Only a few people are talking here. Can we talk in the comment section, guys? And I hope you guys are not responding on the Telegram channel, because that would be shocking. All right. Okay. No, we are not. Okay. Cool. All right. Let's get on to it. Pips. All right. A pip, which is known as a percentage in point or price interest point, represents a measure of the change or movement in a currency pair. It is represented by a single-digit move in the 4th decimal place in a typical Forex code. What is a pip? In actual or in simple terms, a pip is a measuring unit of market price. A pip is a measuring unit of market price. So you know we measure distance with kilometers, meters, centimeters, and so forth. We measure weight in kilograms. We measure volume in cubic meters and so forth. And we measure price in financial market in pips, which is known as percentage in point or price interest point. All right. So this one is usually represented by a single digit move in a fourth decimal place in a typical Forex code. So that means after a comma, the fourth digit will represent how many pips the market has moved. And I'll show you guys an examples. All right. A point is a tenth of a pip. So we have pips and points. What a point is literally just a tenth of a pip. So 1 pip is equals to 10 points. So if the market has moved 10 points, it has moved 1 pip. If it has moved if the market has moved 20 pips, for instance, it has moved 200 points. Now you will notice this. Let me actually just show you now. Let me see if I can open. Let's do that. Let's do that. Okay, so this is just show you guys an example. For instance, let's say from this bottom here going up, the market has moved 112 points. So that's about 12 pips. You guys see that? That's about 12 pips from that bottom to that high. You see it says 120 points there. So that's about what? 12 pips. Do you guys see that? Are we good? And I'm just gonna show you guys here how to calculate them in the next slide. All right. People are still quiet. I don't know if but it's okay. We have 15 minutes left before we close today's session. So typical currency pairs exclude the JPY. All right, and I'll show you why that is. So this will be like your EuroUSD, GBP, USD, NZD, USD, CHF, and so forth, which has many numbers after the comma. All right, the JPY pairs or pairs associated with JPY will be a GBP, JPY, USD, JPY, so for whatever includes the JPY, and their points are calculated differently. You know, they don't use the decimal, the fourth digit in the decimal place. And then metals as well, they are also calculated differently, and I'll show you examples in the next point. So how do you calculate pips? Typical pairs, you can start calculating from the fourth digit after the decimal point. So as you can see here, it's a unit, then comma or point, then 1, 2, 3, 4. You start calculating from that point. So for instance, in EuroCAD, if price was 1.4705, all right, and price increased in 10 pips in value, it will be 1.4705 plus 0.0010, then it will be 1.4715. You see we've added just 10 here, and then it's now 10 pips. And if price decreases 10 pips in value, it will then be the price there, 1.4705 minus 10 points from the fourth digital place, after the fourth digit after the decimal point, which will then be 1.4695. You guys see that? And then with the JPY pairs, I said you start calculating from the second digit after the decimal point. So this one on typical pairs, you calculate from the fourth digit. On JPY pairs, you'll calculate from the second digit, all right, because it only has about 2 digits depending on the broker that you are using, but it has about 2 digits after the comma. All right, so for instance, if the JPY increases 10 pips in value, you have 1.53.20. You just add a 0.10, which will take you to 1.153.30. And if it decreases, it's just 1.5320 minus 10 points or 10 pips, then it will be 153.10. You guys see that? That's how you calculate pips in a JPY pairs or pairs that include JPYs. And on metals like your gold and so forth, you start calculating from the first digit after the decimal point. Do you see the difference? So immediately after the corner, after the dot or the comma, you start calculating from there. For example, on gold, if price on gold is 1775.9 and then it increases in 10 pips, all you do is just add 0.10 there, and then it will be 1776.9. So it is added a 10 pips over there. Same thing here, you just add from the first digit. Do you guys see that? Make sense? All right. We have come to the end of today's session. All right. Now we're gonna run a few test runs. So you test. It's gonna look blurry. You can't see clearly what is on the screen. I'm sure it is probably the network. What you can do is come and watch the session again. All right, come and watch the session again. I'm pretty sure that it's just the network, because on my side it looks pretty clear, and I'm also watching it on my laptop as well as on the phone. It looks very good. I'm sure it's just your network. But all right, so let's do a quick test. So what is the total amount traded in the global forex market? And whoever will answer this today, I might just give you free trading signals. So what is the total amount traded in the global forex market daily? All right. Number 2, which currency comes first in a currency pair? Is it the base or is it the code? I just gave you a clue there. Number 3, at what price are buy trades executed in the forex market? At what price? Is it bid or is it ask? At what price are buy trades executed in the forex market? Is it the bid price or the ask price? And then lastly, if the gold is valued at 1834.6 and it decreases in value by 40 pips, what will be its current value? Anyone, any takers for the answer? Any takers for the answer? If you do have an answer, let me know in the comment section, and I might just $7 trillion. You are almost close, but that is not the exact figure that I told you guys today. So you missed out on that one. All right. And you guys are free to ask me questions. All right, so what is next on our next session? On our next session, which I'll let you guys know in the Telegram group, we're going to talk about the advantages of the forex market, trading sessions, when to trade forex. We're going to touch on forex terminology. We're going to talk about leverage. We're going to talk about take profit and stop loss, how to calculate them, and where is the best place to place them. All right, for those of you that have been attending our free sessions and you feel like, Isaac, I am now ready to trade live, this is for you. This is for you. All right, this is your moment. You've learned the basics. Now it's time to trade like the pro. Unlock the advanced group today. You can join advanced group to trade today, where you get real-time trading signals for free, live trading sessions with experts like myself, pro strategies that you cannot Google, a private community of serious traders. All right, all you need to do is fund your trading account with just $100. This is no theory, it's just action, where we're not just doing theory, we are trading live with you guys. It has been a while since I've been back in the office. I'm now excited to be back at the office. I'm now excited to be working with you guys. I'm now excited to be trading, because remember guys, we are not just a theory people. We need to make money. It doesn't help you that you just learn about what trading is. The reason why you are here is because you want to make money, and we are giving you that opportunity to come and trade with us. All you need to do is fund your trading account with a minimum of $100, and you can log in with us and let us make money every single day, where you get up to 4 trading signals a day of the trades that we take each and every single day. All right, you will get live trading sessions where we are trading live, especially with what you call fundamental events, news events. All right, and you get access to a private community of serious traders. All you do is fund your trading accounts with $100. And the link will be in the description there. Just go and fund your trading account. No theory, just action. I just want to say in ending, there are 2 types of people. There's those who wait and there's those who win. And the difference between the two is action. You decide today whether you're going to take action or you're just going to be a spectator. That's all up to you guys. All right. And our last offer, I have an exciting one that you fund your trading accounts with $500 and more. You get one-on-one mentorship with myself. Right? If you have a funded account with $500 or more, you get a live one-on-one sessions with myself. You get access to premium signals for free. The other one is for the free signals, but we also have a premium group for those for more trading signals. So you get those for free. You get weekly trade ideas pack, risk and money management blueprint, personal trade journal template, VIP traders group access, and many more when you're funding your account with $500. And if you just want to say, Isaac, you know what, I just want to join the premium groups without funding $500, you can join our premium signal groups. That includes 4 signals daily minimum, all right, weekly market breakdown every Monday, live trading during fundamental events, live market reports every day, 2 mentorship sessions in a month, and all you do is pay 500 rands per month. All you do is pay 500 rands a month to get all of that. All right, that's it from me, guys. Hope you guys had a great session with myself. If you do have any questions, please ask them in the Telegram group. And again, I'm gonna ask you guys that you give me a review of today's session, because your feedback matters to me, so I know next time when I prepare, I can prepare in accordance to what you need to learn, and I can improve on how I deliver. Hope you guys had a great session today. From me to you, that's it. Have a great day. I love you guys so much. Have a great one. Cheers.